SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. I'm making a nice quick video, making sure that the sound is working. Yes, it is for the moment. Okay, right, so let's get started. This video is going to be around cycles and the difference between this cycle and the previous ones, and the similarities of the cycles too. There's much more of an investment perspective than any kind of trade. You know, that's my daily beginnings of the day. You're looking at some potential trade setups, whether it's traditional markets or obviously crypto. But this is more about, you know, when we're going to look at navigating through these cycle lows. You know, are they in or are they due to come in? Not so much about guessing the bottom or anything like that, but as far as time is concerned, we're more or less ready for it. Now, if you watch my videos over the last week or so, I've been talking about how this everything bounce that we've gone through just recently, this bear market rally, could have actually even printed the low for indices like S&P and NASDAQ. It also could show the top being in for Dixie. Again, I'm not going to bore you to death with any of this because I talk about this on a regular basis. But if we think about the Dixie, for instance, as one giant cyclical event from this channel, from the bottom to the top, to the bottom to the top, more or less to the bottom, and then up to the top, then what we'll be thinking about is, all right, how long does it take for us to get from the bottom to the top, roughly, give or take speaking? Yeah, this bottom around here, we'll measure it from this bottom, which is part of the actual channel, and we can think about the time that it took for this to take place. And again, yeah, this doesn't have to fulfill again. So that took 1,400, well, almost 1,500 days, really. Okay, fair enough. It's quite a long period of time. It's quite a long period of time. What about from the low, from the high to the low? Okay, so that took, give or take, more or less the same. Okay, so we're talking about 1,500 days, give or take, from the peak to when it finds its way to the bottom of the channel. So if we think about something along those lines, we're gonna give it around here. So we're talking like September 2026. Right, so that's like 4 years. It's just short of 4 years away from where we are right now. Fair enough, fair enough. Okay, so does that sound familiar? A 4-year process, really? It kind of does. Sounds a little bit like a 4-year cycle type vibe, isn't it, really? And if that's the case, then we can bring ourselves back to the Bitcoin chart and look at the 4-year cycles that take place from, you know, the beginnings of a bull market to the end of a bull market. So we'll just measure this last one that took place. So this is the end of the last bear market into the peak of the full bull market over here. Okay, so that's 3 years up, 1 year down. So more or less, that's full cycle's worth of history that takes place with the Dixie. And again, you know, they're not directly correlated, but it's kind of similar. So we spend a fair bit of time going down and a very short, big stab up to the top. You know, similar to how it's worked in the past. Very long period of time going down, trickling down, still making a higher low, and then up to the top. So, you know, it doesn't have to work in this exact cyclical fashion, but it has worked like this previously, as has this worked like this previously. And so let's think about that for what it's worth, okay? Because this is all what TA is about, really. It's looking at patterns, charts, previous history, supports, resistances, and all the other stuff in between, really. So if we think about cycles, we're more than aware of the 4-year cycle. These white lines represent halvings. You know, we've seen it all before. And then we've got this trend line. This is a log scale, obviously, going back, you know, 10 years, basically. And we've broken down below the log scale trend line. We can actually see the relevance of this log scale trend line since we've broken down below it. Resistance, 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 resistance. Breakdown, potential capitulation, more or less within the time frame of where we'll be looking for capitulation to take place. But as we have broken down below this major support, you know, we can really seriously entertain with much more significant lows to take place. So I'm not here to navigate the absolute low really for you. Happy to stand on the sidelines for a little bit, because if there's anything a bear market can tell us, is that when it does finally end, we do go into a period of accumulation. We did over here. Capitulation over here is about 3 months. Bull market begins up and up and away. So, you know, you're not going to get caught out, you know, missing the absolute bottom. No one actually catches these bottoms. You know, when this happened, I didn't buy until we'd reclaimed 3,700. That's where I bought my Bitcoin out. I didn't buy, even though I was watching it. I was happy to watch. I didn't take the plunge into crypto heavily until I saw it reclaim certain moving averages. It's the benefit, I suppose, of having a handle of charts rather than just blindly investing into an area which is still going to return some decent gains over time. So like I say, I'm not here to tell you to buy or anything like that, or even the dollar cost average, despite this being a pretty decent discounted area that's been given to us by things outside of the chart like FTX, as we all know. So with that in mind, let's just think about briefly where supports might lie on this one, since we've come down below this major trend line. The first area on this chart that's presented to us on this log scale that sticks out would be roughly around this area, just above 12,000, just above. We'll move it down ever so slightly. It's around the 12,000 zone. So give or take 12,000, whether it's just above or just below, within about $600 range. It's probably worth putting a box in there, but I won't bother because this is a log scale and these lines are relatively fat. Then below there, the next real major zone is going to be around 9,000 is what we can see around here. And I know that this is going to sound like super FUD or whatever, but it's worth thinking about. We do have a fair bit of relevance around the $9,000 zone. And so we think about what that would mean from the last big capitulation dump from the top. That would be a 46% move down. This would be a 58% move down. Okay, fair enough. So where would it be from where we're at right now? Give or take, that would be about a 30%, and this would be about 44%. Fair enough. Let's look at the last capitulation of the last bear market, which is probably the most relevant, to be honest with you. The higher the market cap, the more relevance I would say it is to be looking at the bear markets. We can do some fractals at the end just for fun. So we broke down from this capitulation over a period of about a full month to the tune of 51%. Okay, so that's from this big one here, a really big one here, and then we finally gave up and flushed everybody out, giving us a final read of 51% from the top to the bottom. All right, let's just say that we're in the midst of that at the moment. So we've come down by 25%, a further 44% will take us down there, and then we could overshoot the mark and come down to the $9,000 zone, 56. So as far as a formation is concerned, maybe this is what we're looking at. We're looking at the final breakdown stages of Bitcoin, leading into the ultimate low that's going to be formed at significant lows, which for most people will scare them right out of this. Similar to the way it did over here. I remember just looking at everything going on and watching some YouTube channels before I set my own one up, really, or at least started to post properly on it. And everybody was flapping around. Oh, it's going to 1,000. It's going to 1,000. You know, this is completely wrecked. You know, it was 20,000 not long ago. Now we're 3. It's going to go to 1. You know, no one really knows, obviously. And these big capitulations, similar to the one that happened to the March crash, are kind of they're big flush outs basically. The ones who keep the money or the Bitcoin in their cold wallets or ledgers or whatever aren't selling. They're off the exchanges. The only ones who are looking to sell are the ones who are getting flushed out. The hodlers win generally in the end, and they probably always will across most assets, really. So yeah, we're looking at cycle lows to be printed at any point soon as far as time is concerned, because if we think about the time from the peak to the low, so far we are about a year in now, aren't we? 364 days, that's right, so a full year from the peak. The last one previously from here to the absolute low, 364, so that's exactly where we are right now. So, you know, maybe we can do a fractal on that just for fun. Again, I'm not a big fan of fractals because you can bend and manipulate them to look any way you like. Then this one was a little longer, to be fair. This one was 400 days. So you could make the case for squeeze these two bear markets together and spit an outcome on this one. It looks as though we're probably weeks away from finding that low, wherever it might be, especially if we can find this significant low of the Nasdaq and the S&P being the bottom of their bear market for traditional markets, and this being the top that we've navigated. You know, so far so good on Dixie. And again, it's never as simple as going straight down. That's not what you want. You want it to reach a peak. You want it to go down. You want it to go up, lower, high. You want it to go down to the bottom over a long period of time. You want it to find the top. You know, or at least this one is a good example. Find the peak, down to the bottom, up, lower, high. Okay, we made a higher high, but we did trend down over a period of what? 1,000 days, 3 years, and the 4th year being a big bull one. Similar kind of stuff as to maybe what we're expecting here. So it does feel like we are maybe weeks away, maybe even hours, who knows, but definitely I would say weeks away to finding that low, whether it's already in, which would match roughly the what I'm expecting, but what could it could be possible with the bear market of traditional markets finding their lows already. Or we do go down further, whether it's to do with some kind of, you know, extra FUD or another exchange or liquidations, margin calls, whatever, you know, takes place outside of this chart. You know, even other things outside, you know, like geopolitical events, you know, China, Russia, Ukraine, Taiwan, you know, whatever happens. Yeah, that can't be read, but it can certainly give us big, juicy red candles into these areas of significance. So give or take 12,000, and absolute significant low, give or take 9,000, you know. Below there, wrecked city to the max, really, down to 6 or whatever. But we're not there yet, and that would be pretty extraordinary to see that, but I'm not going to rule it out. What we're focusing mostly here is on time, and like I say, I think we're weeks away from finding this low. So cycle-wise, you know, as we've already said, and you know, from the beginning, from September to December, that's where the low is likely to have been printed. We're now mid-November. So we're matching the previous bear market from the peak to the to the low, and here's a little fractal here that we can stick in there for the guys who like all this sort of stuff. Whoopsie daisy there, you can manipulate it any way you like. Yeah, whatever you want to do, you can do it with a fractal. There you go. All right, fair enough. So let's just stretch it down to this level. Okay, this is the sort of thing that maybe we'll be looking to find ourselves into this zone. 10,000 flat, fair enough. Again, fractals are kind of, yeah, they are like Play-Doh. You can do whatever you want with them, so I'm not a big fan of using them, but they can get you excited. They can certainly add the excitement factor to a chart, and we'll do that now as well. So here's our cycle low, here's the bull market peak. All right, let's have a bit of this then, shall we? So this is what we could be looking at, whether it's now. Okay, fair enough. Or it goes down to these levels. Okay, fair enough. Wherever we want to go. That's interesting, isn't it? How this one comes up to the top of this trend line and gets rejected. It's a fractal. It does whatever you want it to do. But time-wise is what we're focused on. Not so much about the candle body formations. It's more about the time of this rallying up into a halving and then continuing to go from there. This is basically what we generally do. We rally into the halving, have a little sell-off, and then go up to make a high. You know, we rally up at the beginning of a bull market, come down, rally into the halving, go on to make a high. And if we do come down to this low level, like 12,000 or so, this is the sort of turnaround you'd kind of expect, in all fairness. This is kind of what happened last time. We found our low. We rallied super hard, super fast, and consolidated for a period of time, then rallied into the halving. So, yeah, maybe we can enjoy this for what it's worth. Okay, yeah, we go up to this trend line, whatever we do, and then we rally into the halving, and then that's it. We start, we do a new bull market, and this, you know, as far as this fractal is concerned, not that I'm telling you this is what it's going to do. It goes to 112,000. Okay, fair enough. Okay, risk to reward, that seems reasonable. Diminishing returns with each bull market, that seems fair. We catch it at let's just say between 10 and 12,000. Fair enough, that's a 10x. Okay, that's fine. Diminishing returns each time. This last bull market, if you'd have bought the absolute low to the absolute peak, that was over a 20x. Fine, fair enough. Market caps do that to you know, to the gains. On, you know, the higher the market cap, the smaller the gains. That's usually the case. That's usually the case. And let's just say at the peak of this bull market over here, we find that crypto as a whole, as an asset class, reaches around, I don't know, 10 trillion, give or take. Yeah, I'll take that. Seems reasonable. We do have countries buying it. We have institutions. We'll certainly be buying it. Like I say, we've got the Coinbase and BlackRock deal. That's all fine. That's all going to go ahead. SEC has delayed the decision for ARK. This is just news out from today, from 2 days ago. Sorry, for a spot, be it a Bitcoin ETF. This is where the money will be made. This is where the bull market. This is where the institutional money will be made, and the green candles will exist with a spot ETF. We want Bitcoins physically to be taken off the market, don't we? We want them to be bought, and we want them to be taken off the market. So that's what we want. And I don't know if you noticed, but with a lot of what's been going on recently, with all this FUD about the exchanges, people have been taking Bitcoins off the market anyway, as they have all crypto. There's been a mass exodus from exchanges into cold wallets and ledgers and whatever, just to make sure that they're safe, so that nothing just evaporates them like FTX did. So that's not good in the short term, because the people who are left on the exchanges are selling to the max, and a red candle is a representation of sellers selling for less than market value, just to get out of it. you know, and that's what causes these huge red candles. So the people who are in it for the long run are already in it, and they're out of their exchanges and they're into their cold wallets. The people who are looking to sell still or wanting to sell are still on the exchanges, and there's less people buying it than there is selling it, so you're creating more and more red candles. The fear is high, the sentiment is low, and so with that in mind, it sounds a little bit like a cycle bottom forming. I have messages almost on a daily basis on my Telegram DMing me saying, you know, are we ever going to see another bull market again? And the answer to that would be yes, of course we are going to see another bull market again. We will always see another bull market in something that's highly lucrative like Bitcoin, especially when institutions are forming these kind of partnerships like BlackRock and Coinbase, which is obviously going to be spot. And then we've got, you know, ARK wanting to do theirs, and this is going to be delayed until first quarter next year. So with all that in mind, we are talking about the cycle printing a low over the coming weeks, whether you choose to take advantage of a significant red candle that capitulates all the way down to 10.9 or whatever, or you wait for a period of accumulation to get started into an investment in Bitcoin specifically. We're just talking about Bitcoin, although Bitcoin can represent the overall crypto market, largely speaking. And a little bit of a tidbit, not that it's anything that you probably haven't seen me do. Bullish divergence over here on the money flow index on a weekly, and navigated very successfully the absolute low when it came to Bitcoin, and market this significant area and then this big capitulation dump zone, and we got the low on that. Same thing happened over here. We consolidated after finding our peak to 14,000. We consolidated all the way down to 6,600 or thereabouts, and then we dumped. And we got bullish divergence. Now, the significance of this extreme read on the money flow index can't be understated. It is huge. This is why you should never use, you know, money flow index as a precursor to a bottom just because it's oversold. Nor should you do that with the RSI. You look for divergences, if anything. And if there's one thing we can take home on these last two reads, is that we got significant divergences that navigated and spotted the absolute low. The absolute low. Not that I would take advantage of that, because you don't know it's a low until you see it's a low, but it was a low all the same, a higher low, which is a divergence. And this time around, we're going to likely get that with the RSI as well, which also got a very, very low read over here. Most people saying something like, oh, it's oversold, so you've got to buy it, but no, not the case. MACD also has had a green histogram tick now since back in August. This can be a bit of fool's gold, because you see the cross, and according to the MACD, you basically, you know, if you look at Investopedia, you know, oh, we've crossed bullish, hooray. Not really. You look for divergence. It's called moving average convergence divergence. That's what MACD stands for. And you look for the divergence. Now, we have been having that. The histograms represent the divergence, and we're ticking down a little bit now. So again, you know, don't buy the cross, but look at the fact that it has been diverging. It's below the 0 point, which isn't a big bullish breakout zone. It's when you break out from the from this area, this is where things start to get particularly interesting, diverging and then crossing above the 0 point. That's when things start to get pretty tasty. And as you see over here, and then the divergence being extreme all the way up to the highs. Same thing over here. We're above the 0 point at this point now when we made the cross, so it was bullish, and we went right up to a new all-time high. At the moment, this feels and looks similar to what you'd expect from an accumulation kind of period, diverging but below the 0 point, so not particularly bullish, but you know, money going into it all the same. So we've got divergences on money flow index, RSI, and also an accumulation vibe taking place on the MACD. Doesn't mean we go straight up at all. It probably means that we go down, because that's what divergences are. You know, you get higher lows on these areas, and you also get lower lows on price action. So we should really expect lower lows to form, although, you know, we technically already have printed divergence already. So this is what I'm saying. We don't know if the low is in, but as far as time is concerned, the low will likely either already be in from this last capitulation handed to us by FTX, or it's going to be given to us over a period of weeks, where we see a really big nasty red candle on the volume indicator, another precursor to a capitulation like this. You know, we got that in the last bear market. This is where we crunched down into it, but we actually still made a new low a few weeks later around here. So this didn't match the absolute peak of the volume profile, but it was still a decent low. So again, yeah, I'm not here to tell you that this is exactly the place to buy it, but I think on a risk reward basis, you know, thinking about monitoring Bitcoin over the rest of this year is might be one of the smartest things you've ever done, especially if you for people who are specifically looking to accumulate over a long period of time. I did speculate previously about how bad the chart looks if we've broken down below a 20 weekly, you know, death cross coming in on the weekly. None of this looks favorable, definitely, but the death cross hasn't happened yet. We've still got probably probably a month or two before that actually does happen, but it doesn't bode well for it. But it also matches the way that we were thinking about how we've broken down below this trend line on the log scale. That there's a million models that you can overlay to to match whatever bias you've got. As far as I'm concerned, there's always going to be interest in Bitcoin. It's not going to be it's not going to disappear into thin air. People are always going to want it, and it's still relatively small asset class, and there's a reshuffling almost like on the last stages of a monopoly game taking place with exchanges, and regulations still looking to catch up with, especially the altcoin market. Bitcoin not so much, but the altcoin market and the exchanges themselves. There's a reshuffling going on, and it is like the end of a monopoly game. The bigger players take out the smaller players, take their assets, take their market share, own the board until there's only a few left. So we've got these obviously exchanges like Binance and KuCoin and other big ones, big players, but then we've also got the institutions who want to muscle in as well because they see where this is going. And we've got people like ARK who are obviously horrendously wrecked. Same with Michael Saylor, massively wrecked. But I still think they're on the right track when they think about what it is that they're looking to achieve. Unfortunately, they more or less bought the top on all of this. But from what it is that they see moving forward, I don't see it as a problem. I think they're correct in what they say. It's a disruptor. It's something that you want to have just to hedge against everything else. And it's still relatively small in comparison to what it could be down the line. So overall, we can look at this fractal for fun, and it matches to an extent, but that's what fractals are good at doing. They can do whatever the hell you want them to do. But overall, the main focus here is on time, not so much price. We're thinking about time. We're thinking about matching time, and we're thinking about time being really very, very close to either finding the low already. Maybe like I say, with the indices like Nasdaq and S&P, Dow Jones Industrial Average, all that sort of stuff, gold as well, are all finding their lows, potentially already having their lows in now, and then they're starting their new bull markets. Maybe that's enough to stop Bitcoin from going down any further. That could be the case. If Bitcoin does go down any further, it's not been uncommon, if you've been following this bear market, to see that actually crypto has been relatively weak, although it has mimicked indices behavior and chart patterns and formations. It's definitely been weaker. And when we saw the Everything Bounce 2.0 recently, and we were saying, look, Bitcoin and crypto should move as well, just through association as an afterthought, even though the analysis had been broken down through Forex and indice and commodity. It did start to work out with the Everything Bounce, was working out for crypto, but it was still a couple of days later off the mark. Everything else was moving. Bitcoin and crypto didn't move for a few days, to the point where things were way more interesting in traditional markets than they still are, really, because they're the ones that are respecting their charts way more than crypto. But there's like a delayed fuse, and that is something you should expect, I would say, with risk assets in general. The Nasdaq, for instance, gives you more returns than the S&P. It can also give you bigger losses than the S&P, and the S&P is one that is basically highly traded because it's the market cap on it is enormous, and the history of it is a lot bigger as well. So if we look at all of that, we should go, okay, so fair enough. All right, fair enough. We can mark the end of a bear market possibly with traditional markets, and crypto has got a bit of time to catch up. But if you think about it from a long-term perspective, the gains will be much bigger on something like Bitcoin. Obviously, no altcoin is created equal, and altcoins should be looked at with extreme scrutiny moving into this next bull market, because it's going to be one driven by institutions and regulation, I would say. So some altcoins might just evaporate, but Bitcoin specifically, which is a general overview of the crypto market, kind of does look a little bit like this fractal as far as time is concerned. Let's not think about price, let's just think about time. And this is the sort of thing that we should be looking to expect moving forward. And so if that is the case, then you think about people saying, oh, I'm just going to dollar cost average from here. And other people on Telegram or Twitter saying, you're a fucking idiot. Do you not understand what's going to happen? It's going to go down to 9,000. I saw it on YouTube. It might go down to 9,000. It might not go down to 9,000. You're getting it all wrong. No one catches the low. No one really catches the low. A couple of people in the world might catch the low. But the main thing to focus on is, all right, where am I buying compared to where is it I'm going to sell, and when am I going to sell? So I buy here, fair enough. I might go down by another 50%. We've established that. Where am I going to sell it at? On the first rip or on the parabolic rip, in what, 2024, 2025 or so? Fair enough. Think about it like that, in that kind of perspective. Are you a trader or are you an investor? Or are you both? Whatever it is that you are, your strategy should fall comfortably in your hands, because you've seen what it is that you believe is going to happen. You've accounted for the volatility. You've got a projection for the outcome. And what is it? Are you a trader? Is it in the next half an hour? You're looking to trade the 5-minute chart? That's fine. You do that. Are you an investor? You're going to buy this. You're going to store it in a cold wallet. Then you're going to sit back, chill out and relax, and then revisit the charts in, 3 years from now, see where you are. Because if you are going to do that, I'm pretty sure that even buying at this level is probably going to be okay. It's almost certainly not the exact bottom, let's face it, but I think on a risk to reward basis it's still going to be relatively decent. You're looking for 5, 6, 7, 8, 9, 10x back if we think about the general projection of a model like this. Anyway, regardless, whatever it is that you decide to do, make sure that you've had a good think about it and you're prepared for what's to come, which could be big downsides and big upsides. The only thing you need to think about is time. I remember saying this to some of my family when they said, so you think this is a good time to buy Bitcoin? I said, look, I don't know. This is when I bought it back in 2019. So I don't know. I'm not telling you to buy it. I said, no, I want to do it. You do okay out of this sort of stuff. I want to do it. I said, all right, it's up to you if you want to do it. But what I suggest you do is if you do buy it now, where I'm buying it, or buy what I'm buying, if you are going to do that, then just remember, don't think too much about it. Buy it now. Don't even, you can look at it. Obviously, everyone's going to look at their crypto portfolio and their balance and stuff. Everyone's going to do that. But don't worry about what it is until the end of the cycle, which was, I suppose, always going to be roughly around December 2022. Sorry, 2021, which is where it was. Exactly. More or less, the 4-year cycle comes back to haunt us once again, and all these other people who were talking about extended cycles, was it Benji Cohen and that lot? Yeah, we can apply new theories and models to it and stuff like that, but really the old one still fits like a bloody glove. And in hindsight, we kind of all knew that. To be fair, we kind of all knew that. We get sidetracked from that. And, when it comes to my family members, I told them what to do. I said, don't do anything. Just December, sell it December 2021. That's your plan. They went off and did that. And they've never really looked back. They stuck to the plan. They did it. They bought the low. They sold more or less the top. And they don't know anything about trading. They just, they just followed the simple advice of follow the cycle. Which is where we're looking to do it once again. The cycle, follow the cycle. The cycle is about to print a low if it hasn't already. It correlates quite nicely to the Dixie and possibly major indices as well. And you buy these lows and you don't bother looking back until you get to, where were we going to be peaking this time around? 2025, really. That's where we're going to be peaking, 2025 into 2026. Fair play. Let's think about that, shall we? And not so much about the 5-minute chart or catching the absolute low and being the absolute hero. I'm not here to make exact calls. I do trading, but also I do investing too. And, from an investment perspective, we are getting very close to a really, really valuable opportunity. And it might not pay off. We don't know what will happen. A black hole might swallow the Earth's core and we'll be, anything's possible in this simulated reality that we seem to be living in at the moment. The black swans all over the place. In fact, there's pink and green ones now. So let's just sit back and admire the rhythm to this cycle and expect it to repeat, for better or for worse. It seems reasonable to me that between now and December, certainly by January, the low will be in, and we'll already be starting this this sort of move back up to areas that are key, which have been lost. Anyway, I'll leave it with you there. Thank you for watching. If you made it to the end, please let me know. That was a big long rant. And also let me know if it was valuable. If not, don't comment, all right? You can do what you want. Yeah, comment if you like, I don't mind. It's all good for the algorithm. Slag me off if you like, it's no big deal. Thank you for watching. Take it easy. Have a nice day.